Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade for February 22nd, 2022. We are recording this at 4 p.m. Eastern Time, and this is episode number 188. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing your trade ideas. So today I've arranged for Leslie Jouflas of Trading Live Online to join us as our guest, and she's been a great guest and presenter on other timing research events, but this is her first time on Analyze Your Trade. So happy to have her here. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, great. Thanks, David. And a pretty wild day today. It was lower, it was higher, and then at the closed, it looks like they're trying to leave it a little bit on the lower side. So let's try to make some sense out of all this. We've got Leslie here with tradingliveonline.com. And Leslie, a little background on yourself before we get into it, and also what's going on at the company.
Hi, well, hi, everyone. Thanks for inviting me. I've been looking forward to this. I love working on charts. This is what I do. So this is going to be a fun hour today. Well, Trading Live Online was created in about 2007 purely for educating traders. And I've done that for many years. I use a specific type of pattern recognition, which I'm going to be showing you a little bit of that today, be drawing some in on some of the charts that you asked for. And I've got some courses on my website. One course, the Mastering Pattern Recognition, is a full course, step by step from beginning to end, brings you all the way through structures, the patterns, very important nuances of them, and brings you through how to develop a trading plan and trade management. So you should be able to come out at the end of it, putting all of those pieces together to get you on a trading path.
That sounds like good value. And of course, we'll talk about that more at the end of the broadcast. Right now, let's talk about the major averages before we get into the stocks, and let's look at that S&P 500 if you have a graph on it. I
do. Hang on just a sec. As you can see, I keep lots of charts. People are like, how can you keep track of that? It's like, well, I kind of know where everything.
I'm kind of looking at it myself, saying the same thing, actually. Yeah.
Well, this chart here is one that I've been following for quite a long time. As you can see, this is an upward parallel channel. And we've broken these trend lines to the bottom. Let me just walk you through a little bit of the history of it here. Up here, this is where our highs were back in early January. And this pattern right here really nailed the highs. This is called a butterfly cell pattern. And this pattern does tend to appear at market highs, and it can also appear at market lows as well. But sometimes there'll be a succession of them. There'll be, in other words, there'll be more than one. And then we'll start to see them on multiple indexes and individual stocks. So as this pattern started to unfold, you can see that it started breaking, like this first trend line here, broke this trend line, this one, and this one. And so, back up with my subscribers, we were following this to the downside. Here is where we had this move back to the upside. And this had an extended ABCD cell pattern. And there can be extensions on this last leg. They're Fibonacci ratios, and they're marked in. There's here, there's here, and there's here. Well, using these previous trend line areas that were broken, you can see where these two, the horizontal trend line, the extension of this pattern, coincided with the upward trending dash line trend line. So that was a very strong resistance area with a pattern completion. This is, everybody was sort of getting bullish again back here, but these patterns and these levels were, for me, keeping me on the short side of the market. And then the RSI was also still very, very bearish.
Yeah.
So now, but look at what we have now. This is really interesting, because here there's a big ABCD buy pattern that completed, has had a nice bounce to the upside. This is a Fibonacci retracement ratio. You can see it right here of 886. The 0.886 ratio is what I call the last chance fib ratio. So usually 382, 50, 618, 786, but this ratio here, this one, when the market, right now the market's found support. However, if it breaks this level, this is why I call it the last chance, then the odds are very high that the market is going to get to the 1.0, and many, many times it will exceed that. So we know these are the January lows. There was a very bullish candle with a very long tail on the lows of that. And so you can imagine the amount, the number of stop losses, and traders that bought here, and that will also be underwater. And we can also look at some monthly charts. I think it's important because I think if we break these levels, we're going to start to see some Fibonacci retracement levels from the March 2020 lows, which we haven't seen yet. We haven't really seen a measurable retracement on those.
So what's the low part that you're looking at? Is it 42.50 or 42.20? Which area?
Well, this is on the futures chart. This is the low of 42.12 3/4. And let me pull up the SPX chart. I think I've got it right here, buried under one of these symbols. Another S&P chart. Oh, here we go. This is a good one. Well, let's look at here we go. I'm going to actually look at two of them because they're both, I think, very informative. This one, the SPX, this is the SPX. So that low on the SPX is 42.22, about 42.22 and a half. So you can see here how already this decline, we've already taken out, several months of gains in the market. And where I have this dashed trend line here, that's right where our lows are from January. However, if we go over here and we look, this is where our March 2020 lows are. And this is what I'm really going to be watching, because I think this is where we're going to find where the market goes if that breaks. So if we put a fib retracement on from those March 2020 lows to the highs right here, if this breaks, then we've got a potential retracement to 382. Now, when markets are very, very strong, many times they're going to find support at a 382 and a 0.50 retracement. So I expect to see some kind of bounce if the market does come through here and fall through here. Then the next level to look at would be the 618. Now, interesting, if we line these up with a couple of other things, we can look at particularly where the 0.50 is. And we see that that's an area where the market had new buying coming into it, and it was able to push it up to new highs. And that 50 is almost right about the center of this long candle here. Now, one philosophy I've always done my analysis on is the market has memory, and it does remember these price levels where there are high emotions. So high levels of buying, high levels of selling. So I think this is going to be an area we might see the market bounce. However, if it comes down a little bit lower, so we don't know what the market gets to do anything it wants, then this is also another area at the 0.618 retracement where the market pushed to a new high and then retested that price level. So I think it's not out of the question if we see these lows, broken decisively, that we're going to be seeing some of these retracement levels. But I think it's going to probably offer a good buying opportunity.
Yeah, because we are getting a little oversold in the short run, huh?
In the short run, but those are the levels to be, watching on that.
Yeah.
And so I'll show you on here. It's a little bit clearer.
Because I'm looking as an option guy, I'm looking at the VIX, and it hit 32 today and it closed around 29 and change. And, whenever you get to 32 or something like that, it seems like there's either going to be a full on collapse and the VIX will go to 50, or it's a reasonable place to look for a place to get on board.
Yeah, this pattern right here, this ABCD buy pattern, this is kind of an important pattern now because this is a buy pattern. So this is telling us that the market should rally. That's the direction it's pointing us in, but they don't all do that. And it's gotten, it's already gotten a retracement up from those lows in this one bar, and we're sort of closing in the middle of it. But when the markets fail, when these patterns appear, and then the market fails to sort of do what this pattern is telling us it should do, we should be able to get a nice, rally for a few days off of here. If it just comes right down and breaks these lows, and then here's our January lows, then we're probably looking at potentially even a larger potential buy pattern that might be coming into one of those levels that we just looked at on the longer time frames. So I monitor the patterns after, I see them.
Yeah.
And so I'm going to monitor this to see how it plays out.
Yeah, you have suspicion that the 42.20 and today's lows might be a neighborhood of support, particularly with the VIX and the other indicators, in elevated levels. And we're coming into the end of the month. If something were to be a little bit more optimistic, there could be a little bit of a turn to the upside.
A little bit of a turn. Yeah, I wouldn't expect new highs, but I think we might be able to get, a decent rally for a
Maybe
day or two.
Yeah,
but here's,
4,400.
Here's another chart showing, support at this trend line. And this is coinciding with those levels. So if this breaks, here's the retracement levels to be keeping an eye on.
Sure. All right. Well, do you want to start going on to the list?
Let's do that. Let me put some of these away. I know it doesn't make sense to you guys, but I kind of know where they are if I slide them back under here. Okay, should we start at the top?
Yeah, might as well start at GDX, and since SLV's a couple down, we might as well hit the metals right away.
Okay, hang on.
Kind of do it on a sector basis a little bit.
However you'd like to do it. Yeah, I probably should have just closed them all. So I thought I had them in some order.
Well, or if you have it in some sequence, do it in your sequence. It doesn't matter.
Okay, just give me a second here to.
I just think maybe people have a hard time going from gold to Netflix to the oil market to, the different things that are going on here.
Okay. Well, it was around here somewhere. Well, let's just open a new chart. We'll start from scratch. Okay, so GDX is at the top of our list.
Yep.
Okay, so GDX, unlike some of the other gold trading vehicles, is still in this range. It has not broken out of this range yet to the upside. So it's not quite as strong as some of the others, like symbol GLD is stronger than GDX is right now. So it's at the top of the range. I have a couple of other areas drawn in here. Here's the lower end of the range. Here's an area here. There was a gap down, and you can see how price traded around this price level. It has been trading around it many times. The next area to look for is, if you look at where my horizontal red cursor is, that's just about the 50% of the height of that range. Now that's going to be an area to watch if GDX comes back. That's just above 32. I'm eyeballing that 50% range, but I think I'm pretty close because they've done this a few thousand times. And so that's going to be an area of support if GDX is bullish to hold. If it breaks that level, then look for the lower end of the range. What I'm seeing on the RSI right now is as it's moved to the upper end of the range, the RSI has actually moved up with it. The high of this RSI is only 65, and that's not extremely strong. So what you'd want to see, if there's a little pullback and then a break to the upside, you really want to see this RSI break that 65 high and move above these last peaks to kind of confirm the strength of it. So for right now, it's just still in a range.
How do you feel about RSI when it gets above 60? Are you anticipating an acceleration to the upside? And if you don't get it, you get a little bit concerned?
It depends. Yeah, it depends. Yes, that would look like a loss of momentum. And it's not necessarily the 65 number. It's the range that the RSI has already made with this. So we know that 65 is the high with this push to the upside. Now, with strong pushes on the RSI, they generally will get to 70 and above.
Yeah.
This push here is below where when it reached this high before, the RSI had gotten above 70, but then came back down as it formed the range. So it's sort of a matter of perspective of each pattern that you're looking at. So we know this is a coiling pattern, and the RSI is doing some coiling with this price pattern, but to confirm a breakout to the upside, you really have to see that. Otherwise, it could be a false breakout.
Right. It's had a big run from 29 to 35, so a little give back would not be extraordinary.
Yes, but again, watching these, let me mark this other one in about the 50%. I think it's right about here. So this is our 50%. I'll make that dash so we can just differentiate it. So going below that area of about that 32-ish area would not be constructive in my view.
No, wouldn't be. How about the silver SLV?
Yeah, silver I covered today as well. I'm just going to close these as we go through. We can reopen them if we need them, but silver.
SLV did pretty good today.
SLV. However, let me change this. This was a little sell pattern, ABCD sell here, got nice retracement to the downside. Now it's back up, has not exceeded that high. I'm going to change this to a weekly chart to get a little bit different perspective. Move a few of these things around here. So silver, this is also in a descending triangle formation. And so until it breaks out of this trend line to the upside, it or down, where, if it breaks the downside as well, it just has not been as strong as some of the gold assets that
maybe
that
a price above 23 would light the fuse.
Well, it depends. We're about 2/3 of the way through this formation now. And remember, this is on a weekly. This is daily. We started with daily. I just switched it to a weekly. This is on a weekly chart here. So if the trajectory were to be just sort of up from this area, then yes, that would be just about just above 23. But you want to see a nice, strong bar getting above there. And then, for some traders with these types of patterns, they, just do the breakout. Others wait for a little pullback, throwback to the trend line. But this is definitely the risk area right here where that lower trend line is.
What about the other metal we have here, which is the copper, FCX, Freeport-McMoRan?
Yeah, let's take a look. So actually, I covered this one this morning as well. So thanks to whoever sent these in, because I
already did the work.
Ready to go. Yeah. So again, in an extended range pattern, coiling patterns. But the thing I like about these patterns, even though sometimes they can drive you a little nuts because, sometimes they'll look like they're, starting to break out and you go with it and then it comes back and, you can kind of get whipped around a little bit with that. But these types of patterns are, how I term it is where trends are born. And so this has been in an uptrend. Let's make this a little smaller. A nice strong uptrend since March of 2020. And this is, right now, unless it breaks the downside, this is a large consolidation within that trend. Now we're looking on a daily chart, but let's look on a weekly chart at this formation. Let me kind of spread that out a little bit. Let me go this way. So this FCX broke the downtrend here. And look at all of the tests of this trend lines. That's, pretty important. That was the March low right there. And now, this uptrend. So if it breaks out of here with strength, I would expect it to at least challenge, these previous highs. Right back here, we're going all the way back to 2008 and 2010, 11 here. But if this gets going to the upside, this can challenge these highs and potentially make new highs. With this type of formation, you can also use, a simple measured target of the height of the range and project it up or down depending on the breakout direction. And you can see that that brings the price right up to about those previous highs.
When you're looking at these things, it's all technical. You don't saying to yourself, hey, the money and credit situation is going to get a lot tighter, which means business activity may be slower, which means all the demand that this thing had last year with housing starts and all that kind of stuff might abate, and ergo, this thing could be in the version of following the stock market down.
I don't
look at that at all.
No, I don't, because
you figure the price will tell you when that's happening.
The price tells you, the price. I mean, let me just look at what happened, over here, and watching how this, trend line was hugged. Now, this is a long-term test. We're on a weekly chart, but once this blew out and then got above, this area here, it was just off to the races.
Right.
So I didn't, need to know why.
Yeah.
For me,
but the environment was conducive to big demand in this,
Yeah, and I leave that to you really smart guys for all that.
No, I'm just I like to look at everything,
me.
and this thing from what you're seeing in Freeport McMoran is it's basically just consolidating, and the major trend is up. So until it breaks down in some way, shape, or form, your assumption is after a consolidation will be more upside.
Well, we don't know.
Yeah.
It's whatever direction this breaks,
right.
where here's the, about the center line with this dash line right here. And so this is an important area because it's been holding, right around that area since 2021. And so if it broke below here, I think that might be an early indication that you might see a downside breakout of this large range.
Right.
But when the price came down and was testing these, the RSI actually held, here really, really well. But it's the same thing. If you're looking for an upside breakout, you want to see that RSI move out. Look at the range that this RSI is in. This is just a really nice, handy range that it formed with this coil, because it's going to probably pretty easily give you confirmation of the direction. So if this breaks to the downside and you start to see the RSI break with it, you've got a nice confirmation. And then you can also do your projection. If it breaks to the downside, do your projection to the downside as well. So it's just a matter with a pattern like this of waiting for the breakout instead of trying to second guess it.
Yeah. It's like, you're in the middle of the street. Maybe you look for a commitment to one side or the other before you get on board.
Yes. I think that's pretty, good thing to do with these types of patterns.
Well, one that we didn't get to in between that, it was Kimberly Royalty Partners.
Is that KRP?
Yeah, KRP.
Okay.
Definitely looks pretty good.
Is this a royalty of like a gold mining royalty?
It might be.
Stock?
I'm going to check on that while you do the technical analysis. Yeah.
Okay. Hang on just a sec. Let me put a couple of
I just need to. Oh, okay.
Make sure I'm up to date. I am. I want to take a quick look at the weekly on this. So now I'm only going as far back as 2017. Does that sound right for this? I can try.
Right.
Okay, it does. Okay. So this is sort of in between a rock and a hard place right now, because it's moved up beautifully from the lows. However, you can see where it's found the resistance, right where this previous area was from 2020, I think.
Yeah.
Looking at there. And so it's got to get, it looks like it's, doing a little bit of a pullback here. The RSI is looking, right now is looking strong. Right here, it's still staying up. So if it gets a little bit of a pullback and then gets back above these highs that it's made today, then it looks as though it's going to probably get up towards the 786 and 886 areas. A lot of resistance in this area here. If you look at how back here, you look at how these candles were formed, and those are coming in right around that 786 and 886. Now, if it gets going, the prices spend a lot of time testing, areas testing. We can see that right here. It's testing this level right here. So it's like, okay, if it gets through there, the next level is going to be this chunk of resistance here. But if it holds up here and consolidates, then you've got to be looking for it to, get through that 1.0 and then possibly higher on that. But the all-time highs, if this started in 2017, these would be the all-time highs, and a break above those would be very bullish.
Yeah. And it is in the oil and gas royalty business. So obviously it's a sector that's getting a lot of action right now.
It is. I looked at RGLD this morning as well.
It's a gold, yeah.
That's got some strength to it. But this has right now, we don't have, because of the history, we have a limited amount of history to this particular asset, only 2017, but we can still do a trend line here. And so here's the trend line break. So breaking this downtrend, long-term downtrend here, about 10.5, a retest of that area right here. And so it does look like it's in an uptrend right now, even though it's testing all of this resistance.
Are you showing a high today of like $17.10 or something?
17.10.
Yeah. And then it went home at 16.10.
16.10. Yep.
Yeah. So it's pretty volatile today.
This is a little bit of a sell pattern, but I wouldn't be too concerned about this. I think it's just telling you that it wants to take a little bit of a breather as it's testing these previous levels right here. The main area is this right here, this $10 level. That's
another example of an uptrending market. It's better to buy the dip sometimes than the breakout. Huh?
I think so. With these types of patterns, the pattern that we just looked at on FCX, that's definitely a breakout type of a pattern. And that one I would wait for a breakout. This one right now looks like it might be a bit extended here, and you want to wait for a little bit of a pullback. You may or may not get a lot, but it's probably a little bit better strategy with this type of chart pattern.
All right. Well, we got an oil servicing one up here, OIH. I think that's going to have Halliburton, Schlumberger, and those kind of guys in there.
Okay, let's take a look.
And it's up in the aftermarket, but it was down in the real market. So.
Oh, yeah, I guess with all the news, with Ukraine is going to be sort of getting some of the movements here. This is up. How much is it up in the aftermarket? Oh,
actually, it's down on the aftermarket. So it's volatile.
Okay. Yeah, because I was going to say these are some bearish patterns on here, and the RSI has a little bit, some bearish divergence here. I wouldn't expect this to completely fall out of bed, but get some pullback with it.
It's had a big run.
Yes, it has, and it's testing.
Yep.
Testing these highs here.
Yeah.
So, and that's not unusual. But if it gets through here, it's probably going to be a pretty strong move
Yeah.
to the upside. Let's take a look at the weekly real quick on this. Oh, lots of room to
Oh
the
yeah, no,
upside
this
if
is
it breaks
this whole area has got nothing but upside if it wants to
Yeah.
continue for months and months on end. I was wondering if you threw crude oil up there and we did some Fibonacci analysis, it might give people a little bit of an idea of the oil stocks in general, because, you know, if oil is not going to hold the 100 area for whatever reason, then it's possible that some of these stocks that had big runs may pull back as well.
Let's take a look.
Which we got a peek of that a little bit today with this kind of a thing, you know?
Yes, that's right. You know, a lot of, yeah, it's,
You know, that one we looked at was at 1710. Now it's at 1610. This thing was way up and now it's not as far up. So, you know, maybe the oil price might give us a tip on what that looks like.
Yeah, I'd like to, let's look at this on a weekly here, you know, back here, this is a ABCD buy pattern. This is a really nice retracement type of pattern in trends. This can also be used in ranges, but in trends, you know, you can kind of see where it, you know, holding highs, and the expectation in a trend, if it's a buy pattern, is that it comes up and makes new highs with it. And so that's why I said another one, if it fails to do that, if it only gets a retracement and then it breaks where that pattern completed, then that's giving a type of a warning. But that was a really nice pattern that played out really well. But let's take a look at our weekly. Now I've got some old you know, support lines on here. I've done some analysis and some articles on this market back here when I felt that the lows were being made. And here's where it broke resistance, and you can see, and this is a good example of what I was talking about on like FCX. This is the type of breakout that you want to see when you're dealing with breakout patterns, and see how the RSI climbed above those previous peaks. So that's what you want to, that's what you want to be looking for. Right now, obviously, crude oil is going to be testing some of these areas. Oh, we're right into 786. So we're right in between the 786 and 86. This I would expect to pull back some and then probably attempt to get up to that 886. A lot of resistance up here, but boy, if it gets above that 112 area,
yeah,
you know, it can just really run more. I mean, it can just.
But how's your RSI? Is that showing you enough to be called a divergence, or is not enough?
It's a bit of a divergence right here, but look at the MACD below it. The MACD has made momentum highs with these highs. And so this doesn't look too threatening to me, unless crude oil really declined strongly and the RSI, you know, broke some support down here. But it looks to me like, you know, possibly a pullback. Maybe it'll form a little ABCD buy pattern in there.
What's the high of that last rally is 81 to 85 ballpark figure?
This one here?
No, the one right down to the left of that. Looks like the high
This
point
one
was
here.
around, yeah, there you go, 83?
84.88.
84.88.
84.88.
So
But
a dip to that level wouldn't be off the chart, huh?
No, let's take a look at some fib ratios for a retracement on that. I'm going to take this off so I don't clutter the chart too much. But there's a couple spots we can take those from. One is here. And so a retracement holding the uptrend with the basic higher highs and higher lows, using this one here. You know, remember the stronger moves get down to the 382 and the 50s. It can still be intact at a 618 and even a little bit deeper, but it's obviously telling you that more selling is coming in when you start to see deeper retracements. But it would be looking around, you know, the 382 and the 0.50 on this. Another place that we can look is, see where this breakout is right here. A lot of times where you find where some strength came in is not necessarily at a low, but where a breakout was and it was strong, you can use those areas sometimes as well. So here I see where the 5.0 is of this leg, and matching it up where this strong move started to the upside, a 382 retracement on there. So that looks like it's around the 78, 79-ish area. We'll just make a little zone out of that. And that 618 below is 75. So that's, I'd be looking in this area here.
Yeah, if the news were to change in some way, shape, or form, there's certainly plenty of people long in there, you know?
Yes, and it's not, the downtrend is not going to be broken until there's a low below this low here.
Yeah, that's not likely right now.
Oh, we never.
I mean, right now is all we can say right now. Tomorrow's different day, but right now.
I have a t-shirt from the Chicago Mercantile Exchange. I went down on the floor one day and it says, the Chicago Mercantile Exchange, where there's no such thing as no such thing.
Yeah, exactly. There is no end in sight sometimes.
Yes.
How about USO, which is another, I think, energy deal as well.
Oil fund. Yeah, it's a
Yeah.
US oil fund. Let's go over to this one here. QST, you use there it is. Yeah, they're all sort of looking like they might be ready to take a breather. You know, it popped up, made a little bit of a high above here, and then closed to the downside there just a little bit. I mean, nothing earth shattering.
No.
But you can see a strong uptrend, you know, here, succession of higher highs and higher lows on here. Let me stick the RSI on. And I also want to put the MACD on with it. There it is. Oh, so that's interesting. So the last one that we looked at, Jim, where the MACD was showing us momentum highs, and we had a little bit of an RSI divergence. This is showing us a little bit more of a divergence with the MACD, which is a momentum oscillator. I just use it as a histogram. And then the RSI also has a slight divergence. But however, this has been a very strong market. The RSI made a new peak up here. So I would watch any pullback on here. I would watch the RSI to come back down to around its support levels with price. You see how this formed an inverse head and shoulder right here on the RSI. So that might be a good place to watch with the price. Here's an area of support. I'll draw a line across so you guys your eyes don't have to jiggle so much. I'm watching my cursor. Here's a little level of support right here. But there's a long way. I mean, this was such a huge decline in this. You know, there's still a lot of room to the upside on this. So it looks like it's ready for a bit of a pullback and some testing on here.
You know, someone mentioned the Transocean company, RIG, and it's only $3 a share. Yeah, so obviously it's like buying an option, you know, that can't go lower than 332. You know what I mean? I was wondering, is there anything technically saying, because these guys are dealing in exploration and supposedly they're supposed to get all these rigs back out and maybe start looking for oil now since they haven't looked for it in a long time, you know, and there's money to put into that now. So is there anything here that could be a nice potential?
Yes, that what I see, if you're looking for upside potential, what I've noticed with companies like this, like rig that stays down around $3 like forever,
yeah, right,
or except when it was down at 56 cents,
right.
Is that they tend to stay in these areas. But if you can find the level, so let's do a little work. You can see I have been on here before. This was a previous, that's the butterfly cell pattern I told you about. You know, this is a great pattern to learn. And you can see the decline from there. And you can see this long kind of sideways movement down here, just classic bottoming on here, then strong rally to the upside. So it's still really in a range, but I think that you could use a nice trend line. Well, actually, it looks like it's already given it a bit of a break. But I would use 2 trend lines then, because it's coming back down. So you would want to see it also come above this point right here. So I would watch this to see how it holds a test down here in this area, right around the 3 level again. And if it comes back up and it has a nice break above this level here, that high is 375, a nice break above there. That gives you an excellent place for your risk because it's already done its testing. And then, you know, it can have a ways to go back to the upside if it gets a, you know, a good momentum break. But right now, looking, the RSI is not, yeah, it's not doing a whole
Not
lot.
too, yeah, it really needs to get above $4 probably.
Yeah, but if it gets above here, then you know, that again, that
Something to keep
RSI
on your
should be
radar.
turning up. Yes, I mean, to keep on the radar. If
Yeah,
not,
it trades 25 million shares today. It's a $2.2 billion company still. So, you know, if their business were to come back, which is obviously exploration, it might be an interesting thing to keep on the back of your mind.
Yeah, absolutely. Absolutely.
Yeah. Okay, well, what about Apple? That 157 area in Apple, it seemed like 155, 157 seemed to be a pretty good low area. Do you think that will hold up, or what do you think?
Let's take a look here. So Apple, I featured frequently, and I'm actually going to cover it this week as well on my weekly setups for my subscribers. Let me move that just a little bit more. Here's the center line. So again, here's everybody was really bullish on Apple back here, butterfly sell pattern. So we formed this very large range here and still kept forming more sell patterns than buy patterns. And then it, of course, broke out of here, made a buy pattern right here, and it's rallied back up. Now, the thing with Apple, though, is that if we look at, you know, our momentum here's the RSI. It never exceeded these previous peaks here. And once it got up to these highs, look at the strong divergence and the break of support on the RSI. This rally up, only the RSI came up and only tested in a bearish zone, not a bullish zone. So Apple might have some work to do, you know, before it gets back above here. However, if it gets going to the downside, so let's say those indexes start to retrace like we looked at the very beginning here, and we're following Apple, we know that we've got this support line, you know, right down here, and then this little area right here as well. So this is a larger potential. I have to say potential because the structure of this could change with price movement. That if the price continued down in a fairly orderly fashion down to these levels, that might be a nice buy area for Apple, and it may offer a fairly low risk point because of where we can see the support levels.
And so right now
there's not much. I don't think there's really much.
You're kind of just waiting to see if it will go down and test that area
it's in a bearish mode. It's just in a bearish mode right now. So
patience, a little patience, right?
Patience. Yeah, I don't know. Did I ever tell you how I spell that for trading?
No.
PAYTIENCE.
I got you. That makes sense. That makes sense. Well, the next guy on the docket here is PPC, which is Pilgrim's Pride.
Okay.
Sounds like a John Wayne company, Pilgrim. Yeah, then he called everybody Pilgrim, didn't he?
He did. He did.
Oh, it looks like Pilgrim lost its legs there, though, huh?
Yeah. So what I'm not familiar with this stock. What is the
I'll look into that. Give me a second. Yeah. But on the technical side, what do you think?
Oh, well,
looks like a parachuter.
Looks like it got hit with an ugly stick. Yeah, that's technically what's happened to it. But overall, it's in a large range, very large range for a long period of time. So it looks like this was it came out in 2014.
It's a food company and one of the largest producers of chickens in Puerto Rico and the U.S. and the second largest producer of chickens. So I guess chickens are going off the menu. I don't know. In Mexico, they're big in there. It exited bankruptcy in 2009, and basically it's in Greeley, Colorado. I think you're in Colorado.
No, I'm in Washington State.
Oh,
I'm just
that's right. I'm
outside of
sorry.
Seattle,
Yeah.
and what I like to call Mayberry RFD.
Yeah, right.
Where I am. Yeah, I don't know. Right now, long term, it's in a huge range. This is just ugly. Look at the coil that
Yeah.
was made prior to this. I'm on a weekly chart, so all these little candles are all weekly. I think of these types of coils. I'll expand that so you can see. I think of these as like dynamite sticks being lined up, because eventually it's storing quite a bit of energy, and it's quite a battle between the bulls and the bears. No chickens, but bulls and bears. And there's the break. So on this particular one, a move above this previous high would be bullish, but it remains bearish. I think a test back up around halfway of this candle, or even just to the lower end of that break of the range, might offer a good shorting opportunity short term.
Yep. The next one is BHP, which I think is another metals concern out of Australia, I think.
Okay, let's take a look. Well, it's just tested some previous lows. And I just want to put the MACD on with that too and see. Here we go. So here's the, it's amazing. One of the stocks also that I covered this morning was US Steel, symbol X.
Mm-hmm.
And I started out with a chart from 100 years ago, from 1922, of US Steel. And it's the same price patterns. Nothing has changed with the way price moves. And I mean, sometimes I think, if anything, maybe our intraday moves faster, but the actual price movements, up, down, sideways, the types of patterns that form are all the same. So here you can see where this large range has been. Which sector is this one in?
Natural resources. So you have your copper,
it
you
is
got
the
your
mining. Okay.
Oil, metal, everything. Yeah.
Okay, so you can see
Uranium.
that it's had some, it's had, some, here's a big gap to the downside, and see where this high was here, it came right to the lower end of this gap and tested it. However, if this can manage to hold like from here to here, maybe it makes a little, because it did close above. I mean, that is saying something, that it was able to close above this lower trend line. Maybe it's got some underlying strength to it. So this would be what I would look for if it comes back down in an orderly fashion. Again, you have to know, the structure. If the price goes up here first, then this is null and void. But if it follows this line down, right around to this 64, just below 65 level, so gap right in here, retesting this area, that might offer good buying place with, a risk just a little bit below where that 1618 is, which is right below about where these lows are. But the fact that it closed above here is sort of what's catching my eye. The MACD is just kind of correcting back down again. So maybe it's taking a little rest here above these highs. And I think you're going to see it come back into the upper end of the range. This big gap to close here and one to close up here.
All right, I want to cherry pick a couple here. Let's go to MGI, which I've heard good things about. MoneyGram International, money transfer payments. And it looks like it has, it looks like it's trying to do something here.
Again, testing highs, lows, highs and lows. This was sort of an extended sort of, downtrend within the range. It's broken to the upside. It's had this gap here large gap, pretty large gap to the upside here.
Yeah.
So this one, if somebody is bullish on this, maximum risk, below this 840-ish area, no more than, just like a penny or two below this candle here, 815 maybe. But I think, if this holds, that's a bullish sign. And look at the RSI, how it's held these lower support levels of the RSI have been holding in a bullish fashion. So let's take a look at the weekly on this.
Sure.
See if we can find out. The RSI looks pretty good on this. This is a nice big volume bar on it. The MACD is coming up. Again, looking at on a weekly, you can definitely see you would not want to see it below this, long candle right here, but it looks like it's going to come up and test this. And if it gets above here, let's look at some retracements. Hang on just a sec. Let me just do the whole thing. Then to me, it looks like it would have a nice potential up to around where this 886, this 16 area is. And that's coming right back around to right around this area. And we're on a weekly chart, so that might take a little bit of time.
Here's one for the overseas crowd that might be interesting. It's in energy, MVIS. It certainly looks like it is, well, it's done like the other energies today, kind of slowed down a bit, but maybe it has some potential. This is South American, Brazil's oil company.
Yeah, it does something, obviously it's in a downtrend.
Yeah. That country had a lot of problems, with inflation and this, that, and the other, and weather and everything else. So I don't know if that had affected, but
possibly
it's certainly coming off of the mat here.
Yeah.
I don't know if you have the right symbol though. Do you have it? MVIS? Oh, I'm sorry. It's PBR.
Oh,
my mistake.
Okay.
PBR. I'm looking at different ones,
Okay, PBR.
Peanut butter and whatever. Yeah.
Peanut
Yeah,
butter
that
and
one's
raspberry.
a little different chart. Huh?
There we go. Yeah,
Yeah.
that's a much different chart. Okay. Okay. And okay, this one I definitely want to go to a little bit longer term time frame and see what's.
Yeah. It's similar to the other energies where there's a lot of runway if they're ever going to go back to where they came from, Yeah.
Now this one I've got, Jim, going back to 2014. So I'm going to assume that was when it was listed. Is that as far?
No, it goes all the way back to, it goes back 20 years. It's just that it had a rough history because in the 08, 09 time crash, it was in the 40 to 60 range.
Okay, there we go. I just refreshed my screen and got more data. So we're going to go out even farther to a monthly.
Yeah. I'm sure the persons that are looking at it hope that it returns to its old ways,
There we go. That gives us a better view here. Okay. Now we've got the history. Okay, so this, this is really interesting looking to me because when you have such extended ranges, which is really what this has been from the lows back here in 2016 up to this high and back down to this low, we can start to just, and oh, look at that, it matches up with, so then all the way back. See, market's got memory.
Yep.
Here, so this actually reminds me of Microsoft that stayed in, an extended range after the 2000 and then or 2007, 8, 9 crash. But then it had a very similar type of bottoming basing pattern. And this looks like a basing pattern to me. In basing patterns, the expectation would be to the upside, but here's where it has to get above. You see all of this, this consolidation, this clustering in here. So that is a price level of 13-ish up to the high right there is 1790. And it looks like it's given it a try. The RSI has been moving up,
Climbing, yeah.
higher highs and higher lows with this. It's got to get, now remember, we're looking at a monthly chart, but I think this really gives a good view of what the price has to do in order to start getting, back up towards some of these higher levels. But if it broke out above here, this certainly has potential. Let's do just a little bit of a measured move. Back when I had my live trading room, I had it for several years, and we had been charting Microsoft within a large basing coil, and nobody was interested in Microsoft anymore.
Right.
And then within that coil, we saw, one of our butterfly buy patterns, and it was, sitting in an area that was just a buy, and that was where it took off from. And this looks similar to me. I'm not saying it's going to do the same thing, but it has a similar type of basing property to it. So here, if you get a break above these last highs here, here's a measured move, giving it a target of about 31 or so. But it, sometimes they'll go further than that if they really get a lot of steam. So let's do some retracements. That's close to the 618 on that one. I'm actually going to take it, instead of from the high, I'm actually going to take it from this bar, which is where that down move started from. So that's the measured move, but it looks to me like if it really got going, it'd get back up into this 42.5-ish to 47.5-ish area.
That looks great. Well, before we run out of time here, please, again, reintroduce the company and also how people can get a hold of you. And if you have any special offers, this is a great time to extend them.
Yes, I do. Thank you very much for that opportunity. And thanks for having me on today. This is really fun going through the charts.
Oh, yeah.
I'm Leslie Jouflas, and Trading Live Online is my website, and the website exists for education of traders. And I teach traders this type of pattern recognition. Just exactly what you see me doing is what I teach. I have a 12-hour course that brings you from the very beginning to the very end, a step-by-step of learning these patterns, putting them all together. You have to know what you're looking for. That's one of the skills you have to become very, very, very good at, no matter what you use as pattern recognition in the markets. Because if you're making errors with that, then that reflects in the outcome of your trading. And then I walk you through building a trading plan and how you can test that trading plan. You don't even need a computer to do that. I show you how to do it in a very simple way. And also we go into your risk management and trade management. So the patterns, in my view, are always, they're just patterns. That's all they are. It's the trade management and the risk management that are the engines that run the pattern, so to speak. And it becomes sort of an individualized project for each trader, because everybody's a little bit different with their risk tolerance and time frames that they trade. And I do actually this month I have a special. I have some other courses on as well, and I'm featuring that course. And with purchase of that course, and I'm including all of the other courses that I have a classic self-study course that I recorded in the historic year of 2009, where we had high volatility like we're seeing in the markets now. And I believe that's an excellent course. And I have a course on day trading the S&P 500, and that's going to be included as well. And then you're also going to be able to participate with my weekly market setups, which is really a trade preparation. And if you don't have routines, you'll learn how to build a routine for yourself as well. So if you're interested in that, or you have questions on any of my courses or what I do, feel free to email me, and visit my website, tradingliveonline.com. You can contact me there or check the courses out there. To get the package, though, you have to purchase the Mastering Pattern Recognition, and then we'll set you up with all of the additional courses with that. You'll have access to those for 2 years.
That's perfect. And that's a lot of value for people to get educated, no doubt about it.
Yeah, and it also includes a coaching session
Sure.
with me, and I'm also going to do a follow-up seminar with everybody who purchased this bundle. We'll do that in a couple of months, so you'll have an opportunity to ask questions on the information. Again, my goal is for the education, and help you guys out.
Sure. As far as Option Professor is concerned, we have 5 PDF files, PDF reports we've put out. One is on hedging. So how to use options to protect your positions against market declines. Obviously, would have been very good to have lately. And also the stocks that we like, which are the metals and the energy stocks, because as you can see from the charts, those are the ones that are going up. So optionprofessor.com. And we'll get you those PDF reports. All you need to do is let us know, and we'll let you know how to get a hold of them. Leslie, thanks a lot for being here. It's always a pleasure. It's always a very big learning experience. So people do take advantage of finding out what she can do for you. And we'll talk soon. And
thank you.
Yeah, you bet. And I'm going to turn it back over to David. Good luck, everybody, and we'll see you soon.
Okay, great. Thank you, guys. Talk to you soon.
Okay, thanks, Les.
All right. Yeah, great show today. Thanks to Leslie for being on this series for the first time. And just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also go to TimingResearch.com and get access to any of the past shows or events there. And just want to thank my guests again for today, Leslie Jouflas of TradingLiveOnline.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Great. Thank you. Bye-bye.